All right, guys. So the market is down again. This is the continuation from the downward pressure that we got last week. Again, I told you guys last week I didn't really like the way continuation from the downward pressure that we got last week. I didn't really like the way the market looked. Again, I told you guys last week I didn't really. And yeah, now we're kind of breaking down. I told you guys, man, like inflation expectations is the new fear. The payroll number report that came out last week was not good. Inflation's a fear. Payrolls are feared. You can see payroll numbers came out at 256 versus 160 last week. Unemployment's still low, but I think inflation is the fear. And so I think the Federal Reserve is going to be, they're going to pivot to a more hawkish stance now. And we might see some corrections, I think. With that said, Q down to 500, Bitcoin down to like 90K, gold down to 2680s, a big pullback from where it was. So, oof, what do you guys think is going to happen here? Oh, it's almost always a buy opportunity for sure. You know, the real question is Inauguration Day is this upcoming weekend, and we'll see what that looks like, you know. All right, guys. So, yeah. Markets are looking weak. I'm trying to take a look at everything else here. So here's the Q. Q is down. Let me take a look at some news. It's cold over here, dude. Let me see if I can get my little thing out. There we go. All right. So there's a tsunami advisory issued for Japan's Kachi and Miyazaki, according to NHK. I'm trying to see if there's any other news today. We don't really have any economic data. We have inflation data tomorrow and Wednesday, followed by a bunch of stuff this week, to be honest. Retail sales later in the week, jobless claims, earnings. Do we have earnings today? Wait. I know we have bank earnings. I don't think it's today. I think they are middle this week. So no, we don't really have anything today, earnings-wise. That heats up this week. We got nothing today. It all starts Thursday. Or no, Wednesday. JP Morgan, Citigroup, BlackRock, Wells Fargo, Goldman Sachs, Bank of New York. Thursday, we got a couple other ones like Taiwan Semiconductor Company, TSM. That's a big one. It drops at 2 a.m. though. In the morning, we got like United Health, Bank of America, Morgan Stanley, U.S. Bank, First Horizon. Yeah, I told you guys last week, man. Yeah, this is not really a shock. Payroll data scares the market right now. Absolutely, this is what it is. Payroll data, like, I again, you know, you got some people that pretend to understand, but like, I tried to tell you guys last week, you know, essentially what we're in now, right? If you want to know why the market is down, essentially what we're in is this, okay? So, the Federal Reserve has been dovish for the last, like, I wouldn't even say dovish, but they've been cutting interest rates for the last few cycles. at the end of this month, and the market does not want that necessarily, or the market wants that, I'm sorry. The market wants the Federal Reserve to cut interest rates, right? Because when they bring interest rates down, it kind of unlocks cheaper access to money and loans and leverage to everybody else. And like this kind of helps people and all that good stuff. Well, like it helps people afford more stocks. There's a lot of reasons to do it, right? To bring interest rates down. But the Federal Reserve should only, like in theory, bring it down whenever things are weak enough to justify it, right? Because if the economy's weak, you bring interest rates down to kind of save us. If the economy's strong, inflation's kind of the pivoted worry, right? You worry about inflation over economic weakness because things are strong, right? And the consequence of sometimes a strong economy is inflation. And so with that in mind, this month, at the end of this month, we're not really going to cut rates. We're going to pause interest rates, which is kind of disappointing to a lot of people, especially like lenders, like mortgage brokers, like lenders in general, like real estate agents. Like they don't necessarily want us to pause. They want us to keep lowering interest rates. And the whole market does to a certain extent, I think, as well. And so when we've been looking at economic data, the market has been reacting in a negative way to economic strength, right? And last Friday, we had a huge economic report called the non-farm payrolls report, which basically gauges jobs. It's showing us jobs, like how many payrolls opened up to dictate economic growth and all that good stuff, right? And payroll numbers came in wildly over the expected number, which is triggering a lot of fears and inflation for most people, right? Payrolls came in at 256,000 versus 160K expected. Unemployment was low, which is good. I don't want to, like, people are going to start saying stagflation and all this stuff, but really we're seeing a strong economy, not a weak one. So we don't see the stagnating aspect of stagflation yet. But yeah, right now we're in a period where the market does not like economic growth numbers. When economic data comes out, they do not like it. And tomorrow's CPI and PPI inflation reports, not tomorrow, but Wednesday's CPI and tomorrow's PPI inflation reports are going to be incredibly relevant. And we're going to stream the whole thing live like we always do. But yeah, that's essentially what's going down in markets right now. The whole market is fearing inflation. Basically is what's going on. And this week we got the inflation report coming out on Wednesday. Tomorrow we have the PPI inflation report too. And literally since payroll numbers came in much greater than expected, the market started to panic, right? And again, I've told you guys for the last couple of months that I'm not really interested in buying up anything right now. I think the market needs to correct. I was talking to somebody else, like Family Wise, and I don't know how much experience they really have around the market, right? Like, I just don't know how much experience they have because, you know, I told them, like, somebody sent me an article that said, hey, every 25 years or so, the market, like, corrects a little bit, like a big correction. And I kind of responded, and it was a group text, and I kind of responded. I was like, yeah, I was like, I think the market could correct this year, maybe next year, 2025, 2026. I think we could have a decent correction. But over a 10-year period, market's going to go up anyway. But yeah, I agree. I think we could correct a little bit. And basically, they sent me something back saying, how can the market correct when hot stocks are IPOing all the time, basically, is what they said. And my response to them is like, well, the market could always correct. Number one. Number two is that, like, the market tends to correct after big technological revolutions. And we saw it in 2000 with the AI boom, or with the online boom and bust. And we had one of the longest following bear markets in history. It's a little misleading to say that because the 2000s crash happened. And right when we were rebounding from the 2000s crash, we had the 2008 mortgage disaster, which are two completely different things. And so instead of being able to rebound, and what would label a lot of people a rebound was halted by the 2008 mortgage disaster, right? And then that happened. And then so we downtrended for like a decade plus, but it was from two different things. So it's not the most, like, it's not the most accurate thing to say that it was one of the longest bear market histories from specifically the dot-com crash, but we did have one of the longest bear markets in modern times after that. So yeah, that's where we're at now. Inflation's a fear. We're not there yet though. Like, even these pullbacks, like Nvidia's down to 130s. It just broke highs though, which is interesting, on the 7th of this month. The NASDAQ, when we look at it, is still in a very strong upward trend, and it's nowhere near, we're nowhere near a crash yet. Maybe we're in the start of a correction, but you guys got to remember, a crash is a very sudden major 30% drop, right? 20-30% drop. A correction is a more longer term sustained pullback that can be over 20%, over 10 to 20%, I think is what it is labeled a correction. So we're not really on either of those terms yet. And I think it's a little bit premature to label this that. I think something that could throw a wrench in this bear action is Inauguration Day. I think the market tends to respond well to the new president-elect. And I'm not here to agree with that or disagree with that. I'm just looking at like how the market has responded historically. And I think if that could throw a wrench in this, although it might not. And again, let me know what you guys think at home. Yeah, no, 10% typically happens every year, 100%. And I think we're getting to where it's close to that level. CME barely has a 50-50 chance of one rate cut. Well, that's because the University of Michigan inflation expectations came out on Friday, right? And this was a missed report by a lot of people, but we covered it and we saw the negative reaction from this report. We told people this report was coming out. We covered it as soon as it dropped, and we told people once it dropped the bad implications of this report. And so again, what happened is that the University of Michigan inflation expectations, both 1 year and 5 year, came out on Friday. Previously, they were expected, I think it was like 3% and 2.8%. Like 5 year was expected at 2.8%, and like the 1 year was at 3%. I might have it backwards. But when that report came out on Friday, both of them showed 3.3%, showing 1 year inflation expectations were 3.3%. Again, noticeably higher than expected, probably updated from this payroll report. But not just that, but the 5 year, which is longer term inflation, showed 3.3%, and 1 year showed both 3.3%. And so that wasn't good. Yeah, that's not good. That ain't good. And so that's probably why the market started to fear inflation a little bit more as well. And it's right on the heels of this week's inflation report too. What do you guys think? Right, 6 to 7% down in the last 3 weeks is a little worrying, but still not it. Yeah, I mean, the NASDAQ, if we look at the Q, like we're down from 550 or from 540s technically here from the highs, which, like we're not going to hold these perfectly. We're down from 540s all the way down to, we're currently at 507, right? So percentage wise, we are down about 6% from the highs. That's not even considered a correction yet, right? Again, the big fear is inflation. And so if you want to know like what the market's going to do, watch this week's inflation report. We'll stream the entire thing live like we always do. Because again, I've told you guys the last couple weeks here, I'm not really a big fan of buying up anything right now. I'm not really interested in, buying up a lot of stocks right now. And this is kind of what I told somebody. It kind of goes to show, like, here's something that happened, right? Like, listen, over the past 4 years, 5 years, 6 years, really, it's been very easy to make money on the long side, right? Like, I know a couple, like, family members that have bought stuff, and they think they're genius stock gurus right now, because it's been so easy to make money in the last 5 years. So easy to make money in the last 5 years. All you got to do is buy any dip, you make money in the last 5 years, right? And so they think they're genius stock gurus. The problem is that every dip has gone up in the last 5 years. And so it's not really like that. And I think you have to understand the context of everything. And generally, you can buy dips and they're going to work out. And if you hold long enough, regardless of anything, usually a dip buy is going to work. As long as you're buying like blue chip, healthy stocks, index funds, stuff like that, like you're still fine usually if you buy those dips. But I think we're starting to get to a period where I don't like buying this dip right now. Why is everything crashing? I wouldn't say it's crashing, but things are certainly weak right now because of this. So look up here, guys. Look at that right there. So this non-farm payroll report showed up at 256,000 versus 160K expected. And this is in a period of time in which the whole market fears inflation right now. And the whole market fears inflation because of high payroll numbers. It's why, like, after the election, we had a lot of people crying basically about how, you know, we're in a recession, they say, and they say all these different things because they're getting so wrapped up in the election. And one side's like, yeah, we're in a recession, and they're kind of like, okay, yeah, we must be in a recession. But we're not in a recession, guys. Like, we haven't been anywhere close to hitting a recession recently, in the last few years at least. The real reason people are unhappy is prices, inflation. And I think that's something that should be feared in the market. Like, we should fear prices and inflation right now. Prices have gone up dramatically over the last 5 years. After the quantitative easing, money printing, stimulus check heavy 2020s, markets fearing inflation, and as they should be. But that's the opposite of a recession. Inflation happens when the economy's and the labor market's strong, not weak. But the election kind of makes people think, just kind of yell out buzzwords that they hear on the news, and that's kind of what we've been in for the last like few years. But again, the fear now is inflation, chat, not really economic weakness. If GDP starts to show weak and, you know, all that stuff, sure. But again, the market reacted super negatively to strong economic data in the non-farm payrolls report showing 256 versus 160K expected. Let me see if I can find the University of Michigan numbers so I can put those up on screen so I can really show you guys. Yeah. Macy's sees Q4 sales guidance to slightly below low end of 7.8 to 8 billion, and comp sales roughly flat quarter to date. Sees Q4 adjusted EPS in line with 140 to 165 a share range. EPS, which is earnings per share. Moderna's also says that 2025 outlook is 1.5 to 2.5 billion versus 2.95 billion expected, so worse than expected outlook for Moderna. Johnson & Johnson confirms they're going to acquire Intracellular, which is ITCI symbol, for about $132 a share in a stock deal valued at $14.6 billion. All right, so let me see if I could go back and find these Michigan inflation expectations. I want to see what the expected number was. The expected number. Let me see if it lets me go back. Hold on one second. Yeah, so, yeah, I'm going to go back to last Friday. Okay, so yeah, so again, one of the big shocking reports that we got last week, right? Like, let me draw this on screen. Yeah, so let me draw this on screen so you guys can see what I mean here. Michigan, 1 year inflation expectations. Showed up at 3.3% versus 2.8% expected on Friday. Michigan 5-year All right, so we're going to put this data up on screen as well as in the chat. And this is what's really affecting everything negatively. All right, so here's the two inflation expectations that have tanked the market right here, chat. And this is definitely not good. You see these two inflation expectations reports here. I'm going to put this up on the screen at the top. I'll put this like under. Yeah, I mean it's a lot of stuff, but like I think it's important, and I'll delete it in a second. But like if you look at the top of the screen now. Okay, Michigan 1-year inflation expectations showed up on last Friday, and they showed up at 3.3% versus 2.8% expected, 0.5% worse than expected for 1-year inflation expectations. And that's a big, big change, right? Like you got to think about it in terms of this is what they're expecting for 2025, the 1-year inflation expectations, right? This is 0.5% higher than expected, 0.5% higher than expected. That's a scary update. That means prices might be going up this year. That's what the market's panicking about. Same thing with 5-year, which is a more longer term read. It showed up 0.3% higher than expected. That's scaring people as well. Michigan 5-year inflation expectation showed up at 3.3 versus 3% expected on Friday. So these are scary numbers, man. These are scary numbers. This is one of the reasons, if you look at when, like, the Q and the NASDAQ have all kind of started reacting to payroll data. But if you look at when the market started to do this, you can kind of see it did start Friday, a little bit at least. Like here is 10 a.m. on Friday, right? Here's 10 a.m. on Friday. Look at that drop that we got at 10 a.m. on Friday. Let me see if we can do the same thing on NVIDIA here and see if that's what. And the market's gapping down overnight as well. Let's see. So here's 10 a.m. on Friday right here. Or no, sorry. Here, this is 10 a.m. on. Or no, that's not correct either. This is 10 a.m. on Friday right here. So you see that big red candle? That's from the inflation expectations, and I think the market is just scared right now. I think they're just fearing. I think the market's just fearing inflation now. Yeah, I'm trying to put this up small so it doesn't take up too much space and keep it to just 2 lines. Let's see if I can. Alright, so this is good enough, I guess. Wait. See if I can make it smaller. Why is it like this? Why isn't it? Oh, I guess I have to space it out. I guess I can make this scrolling too. I think I'm just gonna make this scrolling. That'll probably work. Okay. Yeah, we're just gonna make this scrolling at the top too. So we got a couple different data releases, and I'll even yeah. Keep it up with there we go. And I'll also lower this now too so that it doesn't block the actual charts up there. I just want to show people why the market's panicking. And so we got a couple of those things at the top of the screen now showing fear of high inflation's growing. We also had some bad NVIDIA news, and I see some people talking about this as well. Whew. All right, so the White House on Monday declared new limitations on the export of AI chips, right? This is what's tanking NVIDIA and other microchips. So again, the White House declared new limitations on AI exports. NVIDIA shares experienced a decent 3% plus drop. AMD dropped 2%. So the rule, which is an interim final rule on AI tech, will impose restrictions on chip orders for most nations, according to the White House. 18 key allies and trusted partners will be exempt from this, though. Countries that meet stringent security and trust criteria may apply for elevated privileges, while others will be capped at acquiring up to 50,000 advanced GPUs per country, as outlined in a White House fact sheet. All right, and now this is bad specifically because of China, right? China is a huge customer for AI chips, and restricting their access to them, you know, it's not good. You know, it's negatively, it's scaring people. Do I need to speed the scroller up a little bit? I might need to, huh? I just want to get it to keep up with the other thing. Yeah, that's good enough. think I have multiple disclaimers up though. As long as we could probably actually replace this top one. Okay, that's probably good enough. Let's see. Yeah, we'll just put this one up for news. We'll just keep it at the top. Yeah. Let me open this up. There we go. Okay. And then we'll scroll this up here. There we go. That's probably perfect right there, huh? But yeah, market's panicking here, guys. Market's panicking. We got over 600 people here. Don't worry, though, U.S. soft landing in August. Do you think the fires have an impact on markets? Maybe a little bit. Maybe. Yeah, we're going to trade live today like we always do. None of this is real. Institutions know the jobs is good for the economy. Maybe. I mean, we got earnings season coming out this month. You know. So, like, we got a lot of stuff going on. It's not the end of the world, though, guys. Like, every bad news. Again, we don't know. We don't know what's going to happen. I'm telling you guys what the market fears, and a lot of it's going to depend on what inflation shows up at on Wednesday. Right, so a lot of it depends on what inflation shows up as Wednesday. You know, Wednesday's the big day that you probably want to pay attention to. So yeah, just be ready, chat. All right, so is this the start? We're going to do a poll. Is this the start of a larger correction? Or is this just a minor pullback into earnings season? Alright, so vote on the poll. There's the poll. It's live now. Let me know how you feel. Do you think the general population will blame rising inflation? I don't know. I mean, yeah, I don't know. I mean, he hasn't taken office yet, so I mean, nothing's that's going on right now necessarily has anything to do with him. But who knows? I don't know. Why are small caps running? What's the Russell doing? What's the Russell symbol? Is it RTY? Yeah. Russell's down on the day. So Russells are down. Alright guys, so we are on a 5-day green streak now. We have done pretty well, traded large, built up some cushion. The last week we made about $420, 60% accuracy. And we've been getting into some better long-term trades too. Yeah, so Bitcoin's down. Again, look at Nvidia down here, man. I think things are a little extended on the downside, though, so I don't know if I'm going to buy stuff up now or what, but I do think we might have some extension on the downside that gives us a little bit of an opportunity to do something. I did a poll right now. We're pretty 50-50 split. Like 53% think it's a minor pullback, so a little bit over half. 47% think it's a larger correction or crash. And again, I really don't know. No idea here. We're just kind of hanging out, living life. We'll have to wait and see. I mean, gold's definitely pulling back some here, like a substantial pullback. Let me pop the chat out here. And we'll put this up in the corner. Room to run. Yeah, maybe. Yeah, so when is inauguration day? It's January 20th, so it's next Monday. So we got a little bit of time leading up to it. I don't know what we're going to do. We'll have to wait and see. Yeah, so it's next Monday. Yeah, we'll see what we get. See if Bitcoin can bounce. Bitcoin's right at that 90K level. It's a big psychological level for sure. Yeah, so we're sitting tight waiting for some type of good move. I see the market bouncing back small here. Here's the NASDAQ, the QQQ. But it's still a little weak looking, I would say, like a little weak looking. Definitely getting some bearish movement here. We got the 200 exponential down there. We're, again, like we always do, we're going to wait until the open to take some trades this morning. See if we can find something better. Yeah, how's Kramer's picks been doing, man? I haven't really been listening to Kramer lately. He had the whole Kramer curse situation for a couple years, I would say, and then it kind of slowed down. I'm not sure if they're still watching him for that or not. Yeah, watch Nvidia though. Nvidia just dipped, rejected that 200 exponential VWAP level exactly off of it, literally to a T off of it. Nobody listens to Kramer. Yeah, I know people like oppose. Well, people are going to start hedging with gold if inflation's a fear, you know? So, like, that's definitely something going on right now, is that, like, gold is down, though. So, like, but gold ran up a lot last week, you know? So, gold is still green on the last, 1, 2, 3, 4 days, right? So, gold's still up over the last 4 days. Kramer said it was a bad day for the market. It's why we jumped up 70 points. I'm new here. Do you have a long position? I mean, I've got a bunch of different positions, but it's not really, I'm not really giving out stock picks. Most of the positions I have right now are long term. And so, yeah, welcome, man. But yeah, I'm mostly just like, I'll invest long term, but short term, I'm a little bit hesitant about the market right now. I just think the market's risky right now. There's a lot of risk. Look at Nvidia falling down too, though, short term. So Nvidia down to 131s. Nvidia's still falling. Palantir dropped like what? I'm buying another 200 Fubo. Well, Fubo got bought out by Hulu, didn't it? I don't see how the tariffs can help the economy. Well, I mean, the tariffs are something that the market fears, but it's not just that. Like, the market fears inflation, and so people fear the tariffs because the tariffs might mean inflation's going to get worse, right? Because, like, essentially, if you start putting tariffs on imports, the consequence is going to be higher prices, right? And I think that's something the market fears too, especially in terms of the inflation expectations that came out. We don't really have any big economic data today, nothing major. I think we have something at the end of today. Let me see. No, yeah, it's pretty slow. Tomorrow is when the big data starts. Tomorrow we have PPI, CPI, jobless claims on Thursday. Housing starts. But yeah, tomorrow we've got PPI inflation data, some Fed members. Wednesday is the big one with CPI inflation. Thursday we got jobless claims, retail sales, Philly Fed index, which is big. Friday we got housing starts, building permit data. So housing data is going to be relevant with all this stuff going on too. Yeah, well, mRNA had bad quarterly guidance. mRNA had noticeably weaker guidance than expected. I saw it earlier. Yeah, so mRNA, I'll have to find it, but yeah, mRNA basically posted worse guidance than expected. Let me see if I can find it. It's somewhere here. I saw it earlier this morning. Yeah, so Moderna had 2025 outlook that came out. They showed up for revenue for 2025 at 1.5 to 2.5 billion. They expected almost 3 billion though, so they came in noticeably lower than expected there, unfortunately. And so that's what's kind of going on here, is that they expected noticeably lower than expected data, and they ended up showing, or they ended up coming in noticeably under expected numbers, and Moderna did not like it. Of course, it's gapping down a big amount. No, I don't know anybody 7.5 that would be. No. Yeah, y'all hit that like button if you haven't already. Hit the notification bell. We appreciate it. Again, it's a big week, man, and the markets are down. Bitcoin bouncing back a little bit though. Bitcoin at 91.5 thousand. So Bitcoin's coming back some here. Yeah, it's a big week. Let's see if we get anything good. PPI tomorrow could also see turnaround. Yeah, so PPI drops tomorrow at 8:30. It's expected. PPI tomorrow is expected at 0.2% month to month. Or core PPI is expected at 0.2%. So PPI is actually expected to go up a little bit at 0.4%. I think last time it showed 0.3. No, last time it showed 0.4, which was higher than expected. Yeah. Yeah, where are the likes at, guys? We can do better than 100, right? I show 6. That hurts, you know. Let's see. Let me refresh it. Okay, I'm showing 87. We need, let's get it over 100 if we can. Yeah, I mean, Walgreens is up some. As a company, though, like, Walgreens has just gotten so beaten down. It's down like 80% in the last, like, 2 years, 3 years. So it's just not something I necessarily like, you know. Yeah, all good. This could be a correction. We'll see how this week goes before calling it a crash. Yeah, I mean, it's way too early to call it a crash, right? And I think crashes are wildly overpredicted. But at the same time, I think we need a correction now. I think, again, and my logic of it is this. Last 2 years, we're up 105% in the NASDAQ. It's like 100% now, but we went as high as 105% in the NASDAQ in just 2 years, right? In just 2 years' time. That's a huge, like, averaging 50% a year. A lot of the Mag 7 is up ridiculously over the last, like, 2-3 years, really. And that doesn't necessarily mean we have to come back down. But corrections are healthy, right? And I don't even mean a crash, right? I mean a correction, right? Usually we get one every year. It might be time to get one now because things are up big. And I think when we look at it, we got to think about the most, like, probable times to get one. I think we got earnings season coming out at the end of this month. We got the Fed meeting coming out at the end of this month. We got Nvidia earnings slightly after that. We've got, we've got a lot of big earnings coming up. We've got economic data showing up this week, inflation data. The market's already fearing the payroll data that we had last week. And so I'm not saying we're going to correct right now. I really don't know. What I'm saying is that I wouldn't be mad if we do. Is my point. That's all I'm saying. I'm not saying we do or we don't. I'm not really interested in buying up anything right now. I think things are a little bit too expensive at this point in time. I'm more of a value-driven investor. So I would love to see stuff come back down a little bit. But I also don't mind day trading the volatility that we got from this too. So we'll have to wait and see how that goes at the opening bell. But the big AI crash already happened. When, Kyle? You know, again, the argument for a crash, and again, I've been saying this for a few years now, although I haven't necessarily agreed with it, but I've just been putting this thesis out there as well, because it's important that people understand every side, right? People like to act like I'm always polarized in one way, but that's not true. I think I put out a lot of different ideas. You know, the other thing is that typically after big tech revolutions, we have at least a major correction. We got one in 2000, the dot-com bust. Typically what happens is we get technology growth and investors get a little overzealous. Companies get overzealous, a lot of IPOs. Like what happened in 2000 was that anything with .com at the end of it ended up getting like a crazy valuation for the most part and pumping up to unreasonably high levels that were never sustainable. What everybody always remembers is I think it was the pets.com guy. Like he was the sock puppet and he was telling everybody, and pets.com was one of the big names that happened. Anyways, all these internet companies ended up pumping up big, getting crazy high valuations. And again, eventually the check came and everything started to correct. And again, we had a pretty long bear market after that in 2000. But and people always argue, oh, AI is the future. AI is the future. Maybe AI is. I mean, I think AI is the future, of course. But the internet was the future in 2000, and we still had one of the longer bear markets we've seen in modern times. So that's one of the arguments for like a big crash correction / bear market. But I think we could correct this year next. And again, I wouldn't be mad if we did, because I think stuff's just up a lot. And I would rather see economic weakness and corrections in the market versus inflation spike up to 5-10% again. That's not what I want to see. Don't forget about us. Not all of us can handle a correction towards the downside. I mean, listen, I'm not saying we do. I hope we don't. Honestly, if we do, I'll buy. But, like, I hope we don't, right? But if you can't handle a correction to the downside, you know, you're probably a little overextended in markets, brother. We usually get a decent correction at least once a year. And so I just think it's probably time for that because things are just up a little bit too much. Where's Super Micro Semiconductors at? Yeah, I mean, it's still looking kind of weak. This is one of those stocks that have so many bag holders in it, right? If you want to know why so many people push Super Micro, it's because it's got so many bag holders in it, dude. So many people got really greedy and started buying this thing way back here, right? And now they're down huge in it. And so they're kind of like cheerleaders for this stock now. Like, they're desperate for it to come back. I'm not mad at you. If you're one of these guys, right? I'm not mad at you. Maybe it comes back, you know. Well, a crash is a necessary lump. I think a correction is good. But who knows, man? I don't like how the market dumps pre-market booms during the day. Well, that's the nature of it. Sometimes the market pumps up in pre-market and then dumps after the opening bell, mostly from like profit taking. And so you got to think, if the market's up big in pre-market, shorter term traders start taking profit. If the market's down big in pre-market, shorter term buyers start buying up, right? Like, it's the nature of markets. NASDAQ bounced directly on that 200 exponential. Yeah, we've been kind of playing around with the with a combine account this morning, so we'll throw that up too. See, this is the only thing I don't like about Windows 11, dude. Like, I want to format my charts to where I don't have that little helper thing pop up. I'd like to just put it right here and then extend it to the left about halfway there. And then I could put Top Step X up so I can show you guys my futures trades. There we go. %10 is correction. We are close, right? Yeah, we're at 6% right now. But I would say a larger correction is necessary than 10%. But again, I don't freaking know, guys. I don't freaking know. I have no idea how you're using a Windows computer. Because Windows are better PCs, brother. Or they're better computers, is what I mean. PCs are all Windows, but Windows are just better, dude. Apples are good, but there's a huge premium that you get for it, and it's not worth it, right? Like, what Apple sells people on convenience. And so if I've got a computer that I want to surf the web with, sure, give me an Apple. I mean, I'm going to pay 3 times more than the same specs I would get on a Windows. But, like, sure. But if I'm doing work, trading, I'm never going to use an Apple computer. It's just not my, like, preference. Like, from a programming perspective as well. You have AirPod Pros. Actually, I have regular AirPods. But I've also got Bose. I've got a bunch of different headphones, you know. But I like Apple's headphones. I don't like their... I mean, I like their computers. I'm just not about to spend $6,000 on an iMac for the same specs that I'll get for $2,000 on a Windows, brother. You know, that makes no sense, right? And that's mostly just kind of like a pitch, like a gimmick, like a selling pitch. Like, they kind of just pitch people, ooh, our computers are better. And, like, listen, do whatever you want to do. I like Apple company. Yes, the regular NASDAQ, but this is also a combine account, so. Make this a little bit larger. I've never used a laptop that's up to the quality of a MacBook. Sure, and listen, MacBooks are cool. Like, listen, I'll even dare to say I like MacBooks a little bit more for certain things, right? But the price difference, and it's a closed off system. I don't like that at all, right? Like, I want to be able to download what I want. I want to be able to use it how I want to use it. I want to be able to download a bunch of different softwares without worrying about it. And you can't do that as easily on a Mac, and it's more expensive. Not really that much more if you factor in that you don't have to buy an operating system. I don't really have to buy a Windows operating system, do I? I mean, I don't ever have to buy it when I start it up. Yeah, Linux isn't bad. I mean, it's not terrible either. I used to have some. Linux is good for like pen testing and stuff. I like Linux, but yeah, it's all good. It's all good, bro. Everybody's different strokes for different folks, sir. Yeah, that's Sam. Very little trading software is available on Mac. That's the real issue. As a software like heavy user, yeah. Like, I've been a trader trying to use an Apple, and it's not easy. Dude, I never bought Windows 11, bro. I just bought this computer. I bought this PC 3 weeks ago. Never had to buy Windows 11. They forced me to upgrade it, too. Like, I wanted to stay with Windows 10, and it kind of forced me to upgrade to Windows 11, but I never bought Windows 11 ever. Again, these are mostly, like, marketing pitches, but don't you think the 10 years telling creeping up to 5%? Yeah, yields are going to spike. You know, you're talking about yields, right? You're talking about TNX yields. That's a hawkish, yeah. Look, here's yields. Right, yields are going to follow interest rates, guys. Yields are going to follow interest rates. And if inflation's a worry, yields are going to spike, right? Because essentially, like, a hawkish Fed means yields go up, right? It means higher interest rates. Yields and interest rates have a positive correlation. Was it priced in? What priced in? Yields? Yields go up with interest rates, guys. If you want to know why, it's because the more inflation, the higher prices are, the more people hedge with risk-off assets like bonds, and so, or the less, yeah. I mean, I think I got that backwards, but the point is, interest rates and yields follow each other, and so if yields go up. If interest rates are expected to rise, or if the Fed's expected to be hawkish, yields are going to rise with it. It's one of the reasons, like, the Fed has been noticeably more hawkish over the past couple months, and you can look at the 10-year yields just pumping up big. They're going to follow. They're going to follow interest rates, and if we looked at what they're expecting here. 97 to 3% likelihood of a pause, right? So a cut this month is all but freaking out of the question, right? It's very unlikely that we're gonna cut this month, which is interesting too. So right now, what we're seeing, guys, so for a little bit of time after 2021, really, like after the quantitative easing, money printing, stimulus check heavy 2020 period, inflation spiked, right? And it got to a point where inflation was such a worry that any positive economic data, the market would tank on it, right? So it was backwards land is what we called it. Good is bad, bad is good scenario. And again, that's kind of where we are now. I told people this before. We did a poll last week on Friday before the payroll data came out. And what I asked people, I said, does the market want higher or lower, or I think more or less payrolls? And a majority of people in my stream said higher, that the market wants higher payrolls. And before the data came out, I told you guys I thought that was wrong. I told you guys I thought payroll data is something in which if it comes in way higher than expected, the market's going to panic. And that's precisely what happened. Payroll data showed up on Friday, way over the expected number, and the market panicked. Market dumped down on that data. Nvidia had some bad news over the weekend. Yeah. And the market panicked. And again, this is why I got to show you. If you were watching somebody who thought the market would react positively to higher payrolls, again, watch my stream. Because this is a very easy thing for anybody that understands economics to gauge based off of the other historical data we came out. And again, I think we got a lot of people who are trying to pretend to be economists that don't really understand. They don't really understand. But yeah, again, and the other correlation, remember, yields and interest rates follow each other. Now remember, so the Federal Reserve will influence and adjust their short-term interest rates, called the federal funds rate, to influence economic activity. They will raise it to curb inflation. They will lower it to stimulate economic growth. When the Fed raises interest rates, yields on newly issued bonds rise to remain competitive with the higher interest rates available elsewhere. Okay, so that's the way, like yields and interest rates follow each other because it has to do with like competition. When the Fed cuts rates, bond yields typically fall. So a bond yield is basically like how much you make. It's the return that you get for holding bonds, influenced by its price and the interest payment. Yields rise when bond prices fall is another nuance that you want to understand, and vice versa. Again, yields rise when bond prices fall. When bond prices rise, yields tend to fall down, and higher interest rates make existing bonds with lower yields less attractive, causing their prices to drop and yields to rise, right? A little bit nuanced, but yeah. I wish I could take this song out of this playlist altogether. I had to skip it. All right, but again, remember, guys, interest rates and bond yields reflect inflation expectations because inflation erodes the purchasing power of money over time. If inflation is expected to rise, like we're in a period right now, the Fed may increase interest rates to cool the economy down, to kind of push the economy down a little bit, leading to higher bond yields, right? And it's one of the reasons you see bond yields spike on a hawkish Fed. Similarly, if inflation starts to go down, right, if inflation falls, it can prompt the Fed to lower rates, which typically reduces bond yields, right? So there's a lot of nuances you got to understand. I'm not a fan of the price action right now. What's up, Sam? Leading into the open, there's a good chance that trend could become obvious. Yeah, maybe. As far as CPI, yeah, CPI comes out Wednesday. PPI comes out tomorrow. I appreciate everybody being here, guys. Thanks so much. And again, if you want to check out one of my sponsors, we are going to be day trading on Top Step today. We're going to buy this dip. This is a funded account program in futures where they give you a demo. They test your skill with it. We're already up about $400 on the day. If you pass their test, this one I have to make $3K in profit without losing $2K first. I'm going to take half of it off. That's $100. You can see how similar it is to day trading stocks. I'm going to get out the rest. It's a $200 gain real quick. If I can make $3K in profit on this $50K demo without losing $2K first, following their rules and conditions, they fund me $50K with a 90% split, right? And this is in the futures market. I'm basically day trading the QQQ price action, which is kind of what moves very similarly to blue chip stocks. The patterns are very similar to blue chip stocks, and you can see the day trading aspect is very, very similar to blue chip stocks, but there's no PDT rule. Most pro day traders actually trade this. They trade futures. And it's a great way to learn how to day trade. Top Step's the most legit one in the world. They give you a 50K demo. If you can make 3K without losing 2K following their rules, they fund you. And once you're funded, there's a 90% split. So it's similar to funding your own account with 90% split. And you get to keep your first 10K in profit. If you fail, you only lose $50 for the base one. Basically, it's $49, right? So it's not the end of the world if you fail. But if you pass it, it's similar to funding your own account. It's kind of like the best of both worlds, right? And they've paid out over 150 million since 2020, and almost 200 million, I think, now. They fund thousands of traders. They've been around for over 12 years. It's the most legit one in the world. And I love using this for testing strategies, or if you want to get started with less risk. And most day traders lose. I think that's the same here. Most day traders are going to lose regardless of where they go. But frankly, it's a lot cheaper to lose here than it is to put up 10, 20, 30 grand, fund your own account in stocks, trying to look cool and just lose thousands and thousands of dollars. I don't think that makes any sense. And again, if you want to check them out, here's the link. I'll put the link up. They are an affiliate of mine. I am biased in their favor. Remember, a top 3 most biased trader of all time ever in the world. I do get paid by them. And it's just a good way to learn how to day trade. So again, if you want to check it out, here's the link. Great way to help support your boy here in this channel. I'll put the link up right there. Understand all these rules, chat. Understand all these rules. And understand, do not copy me. Worst trader of all time ever in the world. Yeah. So Howard Hughes shares climb on Bill Ackman's $1 billion buyout offer. Macy's is also down a little bit today now. The VIX, I would assume the VIX is kind of high right now, right? Yeah, the VIX is climbing up, and this is volatility, right? So the VIX is volatility, guys. So, you know, you can see kind of average volatility is down here. I would say about 10 is average. Right now we're up to about 21, or not 10 is average. I'm sorry. 10 is the bottom range. 15 is average, maybe, you know, give or take over the last 6 months to a year. I would say like 15 is average. We're now up to over 20, getting to the top end of this volatility range, since July. And so volatility is rising. Typically we're a little bit more volatile during the holiday season. And so that skews the averages a little bit there, but the VIX is rising this morning. It's up. I think the market's volatile right now. And I think there's, again, I think right now we have risks. Yeah, so again, shares of Howard Hughes Holdings is up after Bill Ackman's firm offered to buy every share it doesn't already own for about $85 a piece. The stock is now up to almost $80 a share in pre-market. Yeah, just kind of covering some news. Again, Macy's stock fell. Holiday sales disappointed expectations, and so that's true as well. Do you think the data is manipulated to avoid big sell-offs and then revised later? Not necessarily. I mean, yes, to a certain extent. It's all data is somewhat manipulated, right? But this has been true since data's been being released. It's not a new thing, right? This has always happened. But I also think that if they were going to manipulate the data, they wouldn't have made it so high, right? Like they would have done payroll numbers to a high enough point to build optimism, but not a high enough point to where it induce a panic from inflation fears, which is what we got, right? So I don't think data that makes the market tank was necessarily always manipulated. I think, again, I've told people this before, but inflation's a fear. I would rather us go into a recession personally than see inflation spike up to 10% again. Because once that happens, it can spiral out of control and it's really going to negatively affect everybody. But again, there's a lot of bias, right? Lenders obviously want low interest rates because, without low interest rates, it's hard to sell loans. But right now, I think we're at a period of time, and I just bought a rental property. So honestly, it's better for me if interest rates are low, signaling a bull market in real estate, right? That's better. But at the same time, I'm okay if it doesn't, because I'm holding that property long term anyway, so it doesn't freaking matter. I'm gonna make money long term regardless of any of that. And I would much rather just have inflation under control for an extended period of time. I don't think inflation's going back up. Well, it depends on what the Fed does. If the Fed starts doing QE, quantitative easing, which they should never do it right now, inflation might spike up again. But hey, thanks, Giovanni. Appreciate it, man. Who's a rich kid? I wouldn't say I'm rich. I wish I was. If you hold real estate, wouldn't you want higher inflation so your property goes up in value? higher inflation doesn't necessarily mean higher real estate prices. It can, but that's a lot really nuanced. Not you, you're poor. Well, I'm not poor either. I'm kind of right in the middle, I would say. I mean, I do well for myself. Like, my business does well. But, like, rich is different. This is the NASDAQ, the NQ. If you want it on TradingView, just type in NQ. Here's the VIX, which is the volatility indicator. And then here's the video on the top right. Gold also tanking this morning, too. Like, I looked at gold first thing this morning. So I looked at gold first thing this morning. Look at gold this morning, man. Gold's down. Big. Are you a millionaire already? Depends on what you classify as it. In terms of, like, assets, maybe. You know? Do you think Nvidia dipped enough to buy now? I don't know. I'm not buying anything right now, including Nvidia. Personally, this is just me. I'm not influencing you guys. I have no freaking idea what's gonna happen. I'm not a market investment professional. I have no freaking idea what's gonna happen. I'm personally waiting, and I've been waiting for the last month and a half to buy up stuff, to be honest. VIX is right here on the bottom. I already got it up. Well, 10 mil is rich, I would say. 10 mil is probably wealthy, to be honest. 10 mil, I think you guys don't understand how, like, wealthy 10 million is. Right? With $10 million, okay, just to put this into perspective, right? With $10 million, you can take half of that 10 million, just buy guaranteed return bonds, right? Right now, you get about 5% a bond. Yeah, so with say you got $5 million, you take half of that money, you're gonna earn yearly about $250,000 a year just in bond interest, right? And you can use that to build more. You could also then throw the other 25% into, like, markets, right? And then you take, what, 2.5 million, you put it into, like, the S&P, the NASDAQ. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. In 10 years, you're gonna over triple that, or maybe not. Yeah, almost triple it. And then, yeah, like, then you could do whatever you want, buy real estate with the other 2.5 million. Like $10 million is wealthy, without question. It's wealthy. You know, there's a lot you can do with 10 million to hold on to it. It's very easy to make money when you have it. Right, like, if you have big money, like, it's easy to make it, right? Like, there's a lot of ways, and most people should be able to live off 250K. 1 million is very well, but I don't know. Yeah, I mean, you're gonna have to pay taxes for sure. Gold and stock market tanking at the same time. Weird. Gold tends to have a macro follow with the market, right? A lot of people look at gold and they think that it always does the opposite of markets, and that's not true. Gold usually moves in a macro sense with markets. So most of the time, gold follows the market on a long-term view, like long-term. Short-term, it can get a little bit more nuanced and varied in its reactions to stuff, but long-term, it tends to follow markets. Yeah, you could live off yield payments. You could buy rental properties and live off that. There's a lot of things you can do with $5 million to just be set for life, right? $1 million will disappear quick, right? But again, that's the problem mostly is, like, people take a third of all the money they have and they buy, like, luxury vehicles that they can't write off, right? Like they buy, like, a Lamborghini with $1 million and they think they're rich, and then the insurance on that thing is going to be like a K a month. You know, it's just going to be obscenely expensive, and that's how they take $1 million and make it disappear. But if you're smart with $1 million, you know, you can do a lot of different stuff. You can buy 2 rental properties, $250K each. That should bring you in like anywhere between $2,000 to $3,000 net a month, right? So there you go, boom, you're making 30 to 40K just without doing anything net, and that's again, that includes interest, taxes, all that stuff. And then you could take the other half of it, buy, you know, 250K in the stock portfolio, make dividends. That's probably going to produce about like 20K a month or 20K a year. So then there's like 60K a year that you got for doing nothing. And then you can do whatever you want with the other 250K. I'd personally invest it in other stuff, but do whatever you want, right? Like, there's ways that you can set up your life now. But the problem is that people would get $1 million or whatever, and they just don't. They want to look rich, and so they want to show off, and they end up just burning it. I'd go for bonds. Bonds are good. It depends, man. You got to diversify. You know, I would just diversify to a bunch of different stuff. Hey, see you, Sam. Have a good day, bro. We don't really have any big data today. I would diversify into a bunch of different stuff. I'd probably buy a couple rental properties, throw some in the stock market, maybe throw a little bit of it in bonds. Yeah, we're at almost 5% right now. All right, we got gold at 26.80. It depends on how long you're willing to sit and whether you need to live off of the interest. Sailor just posted on social media 30 minutes ago. He hit the ATM again, and now he holds 450,000 Bitcoin. Well, yeah, you invest it, but what do you invest it in is the question. What would you guys invest $1 million in? Good question, I think. What would you guys invest in? I think for me, it'd be a mix of real estate and stocks, and I just hold long term, you know. Right, exactly. 7.5. That's the way most people should do it. Yeah, high yield savings, sure. I'd probably put like 70% of it in real estate in the market and maybe some bonds, and then maybe put like 20% of it in a little bit more risk assets like crypto. You know, I'd definitely buy a little bit of gold from it, maybe some collectibles. Like there's a couple different things like I'd throw it in just to diversify. Yeah, bonds are good. You could buy like the T-bill ETF too. I like the T-bill ETF. It'll pay you interest payments monthly and dividend payments. A little bit easier to manage finances that way. Although the fees are high, there's probably some better ways to avoid the fees. Yeah. Steaks and lobster. Yeah. All right, guys. So market's kind of choppy range here. We don't really have any economic data. We don't, you know. This takes all too much time. Life is short. Life is short. But that's why it's probably better to find a way not to work like most people do. Most people spend a majority of their life working for somebody else. And the point in what we're saying is that if you find good ways to manage it like that, you don't have to do that. You have more time to enjoy life, spend time with family, all that good stuff. First generation Charizard. So collectibles are interesting, but like you also have to understand, listen, so I grew up in the 90s, right? Even by the 90s, by the time like the early to mid 2000s happened, collectibles started to decline in interest, right? Like you had big booms in collectibles and then they declined in interest. The people who are doing the best right now are people who bought up boatloads of highly collectible and rare cards during the bear periods of collectibles, right? Like collectibles were not always hot. We recently got another collectibles boom, honestly, partly because of Logan Paul, right? Logan Paul started getting into Pokemon cards and he sparked another interest, right? And so now we're seeing like sports cards and collectibles, like they've been rising, but I think over the last year they're down some too. They're like, over the last few years they might be down more. But the point is, it's not always a good time to buy collectibles. If you're gonna buy them, waiting for the quiet, slow bear markets in collectibles is the move, and that's not easy to do. You know? Let me see if I can find a graph. Any good sites for graphs on this stuff? It was actually Logan that wore the Pokemon card in his fight. Yeah, I'm looking for graphs. Like in watches, you have like collectibles graphs. Let me use AI and ask AI. I asked AI, where's the best place to find a price graph that shows the last 30 years of price swings in collectible cards? Price charting. I don't think anybody does this, man. This might be a good, like, business. None of them offer a 30, like, a long-term price graph. Yeah, I'm looking, like, the farthest they go back is April 2021. Huh. Can tenure come down dramatically without triggering a downturn? The 10-year yield is going to go down with interest rates, right? So, but the only way interest rates are going to go down is if the economy turns weak. So cult of personality is strong with social media. If you have the special sauce to get a cult, then you're yeah, I mean, it depends, man. Like it depends on whether, like, if you like the reality with social media is this, right? Like you got some influencers who go with like shock value. You got other like podcast hosts or that are just good conversationalists, but there's also a degree of luck that comes with that, right? And then you got people kind of like me where I try to give people what they want to hear, right? Like if you solve a problem for people and you give people something that they want to hear, if you fill that niche of like, hey, this is what people want to hear, then you can grow, right? It also just takes like spotting trends early. But a lot of people try to copy other people and do that stuff, but really you just got to solve a problem. You got to figure out what people want to hear and create content based around that. I don't know. I don't like the restaurant business. Buy a food truck. Yeah, food trucks, I've thought about it. The problem is there's so much risk, man. Like, so, and like an example of it is like, okay, you got like what, like a 30 to 70K startup price, right? So your risk is 30 to 70K. Restaurants, the issue I have with them is that even if you get one that pops off, right? Even if you get a restaurant chain that pops off, a chain is different, right? You get a franchise that pops off, that's big money. But if you get a restaurant that does well in a specific location, there's nothing guaranteeing it's going to continue to do well. There's so much variance in the restaurant industry that, like, for me, it was never like a business that I wanted to start. But everybody's different. Certain people are going to do better at it, have better ideas and all that good stuff. So it's not like just because I don't want to do it, y'all shouldn't. It depends. Depends on who you are and whether you can get it done. Yeah, the margins aren't great. Like, that's my issue. And there's too much variance. There's a lot of businesses right now that are really, like, sold to people on the internet, right? Like drop shipping, you know, like drop shipping, like door-to-door window cleaning, you know what I mean? Like, there's so many different businesses, but for me personally, like, right, as a person, I don't want a 50K job business. I don't want to have to go work for myself and make 50 to 100K. Like, I don't need that. Like, I want something that's going to make money while I sleep that I can scale. So there's certain businesses that I'm just not interested in doing. But that's me, right? And you guys at home, like, y'all might have different situations than me. And so there's going to be businesses that, you know, you would be willing to do that for. Yeah, laundromats are pretty good. I've thought about building trailer park. I've thought about that as well, but it's certainly not passive. That's a lot of work, and that has to do with like quality of life, right? Like, you're gonna have to deal with a lot of nonsense running your own park, but it makes money well. But it's just a lot, you know. Candy machines can be good. The issue that I have, it wasn't candy machines, it was vending machines, right? The problem is that the technology for vending machines gets better and better. And so then you got to buy new machines, right? And that throws kind of a hiccup in everything. Like, it seems good, but I also don't want to have to buy new vending machines every 3 years, because in that point, it's not worth it. And maybe the time between machines is much longer than that. And so in that regard, maybe it's easy, but I also think it's saturated. E-commerce is good, but to a certain extent, I'm already doing e-commerce. Physical, mental health, financial health. Yeah. I mean, I'm in good shape. I do jujitsu multiple times a week. That's a huge workout, and so I'm pretty lean actually right now. I'm probably like 165 lean. You know, good cardio. 568 on SPY by the end of the day. Honestly, the market's chopped up so much. Look at the market. Look how choppy this is right now. I think the whole market might fear inflation data. So I think I'm going to short this, which is kind of the first short of the day. We're already up a couple hundred. So we got some range here. But the market's choppy, and maybe the market's going to continue to chop into inflation data. I really don't know. Right? Like, I don't know if the market's going to stay choppy into inflation data. I see we've been in this range for a minute. There we go. All right, we're going to cut half there, lock it in. Now we're up another 100 or so. We'll get out there. So we just made about $130 roughly. I'll take that. Pretty good accuracy. I don't think I've lost today. So we're up about 3, 4, 5. About 650, I would say, right now on the day. 650. Yeah, 630. So we called this little breakdown. Look at that. And the logic of it was like, hey, we've been in the sideways range for a while. We put in a higher low here and here, and so, you know, it was probable that we might break down some there. We were right. We'll see if it continues. Live modest, invest time in your kids. Yeah. Yeah, my son had his little birthday party yesterday. It was fun, man. We did a lot of fun stuff. yoga gyms, niche specialty fitness centers. Yeah, maybe. I think there's a hard, like, that's a large startup cost, though. I thought about doing a jiu-jitsu gym because, like, it's a passion of mine. I'm almost a blue belt. I mean, obviously, I wouldn't be the coach. But I was talking to somebody, and they were telling me how bad of a business it was, right? Like, they basically said that you don't make money for years. The margins are terrible, right? There's so much headaches that come with it. It's just not a good business, right? And so I'm not going to do that now. I thought about it, but I don't like the locking yourself into 3 years of rent. That's what I don't like, right? Like, if the failure rate is so high, like, locking yourself into 3 years of commercial rent seems expensive. Johnny Lawrence, you're a cream puff. Johnny, you're a cream puff. My friend ran an MMA school for a bit, and it was not very profitable. Yeah, I don't think it is. Yeah, we're so choppy right now. I think the market might be flat leading into inflation data later this week. We also have big earnings, and so I think it's not just inflation data, but it's earnings that come out this week that makes the market panic. Yeah, insurance. I mean, I heard insurance wasn't as bad as people think for MMA gyms. Yeah. What do you think of Warrior Muay Thai from Toronto? Never heard of it. Don't know what it is. Seems like a Muay Thai gym. I like Muay Thai, but I don't know anything about, like, specific ones, especially in Toronto, brother. I'm in Houston, man. I don't know about that gym. That's too far away from me. I've never been to Toronto. All right, guys. All right. Yeah, I've seen Bloodsport. Yeah, so we looked for a little while. I had a guy, it was a long story. I had a guy who had some type of fallout with my jiu-jitsu gym. And I'm not going to be too specific, but he had some type of fallout, and he approached me asking if I could help fund, like, another jiu-jitsu gym. And so I thought about it, but, like, 3-year rent, thousands of dollars a month, high failure rate, just made me, and also I didn't want to burn bridges with my gym, right? Like, I don't want, like, I like training, like, I don't want to have to find a new gym, like, or anything like that. And so I just told him no, and he got kind of, like, you know, weird about it afterwards. But, like, dude, like, people get desperate and they blame their problems on other people, and I think that's something that happens a lot. That's something I've learned, man, is that in business, people blame their problems on you, and if you don't solve it for them, they get mad, you know. Is it worth moving from Toronto to Houston as a full-time trader? I mean, I'm not sure. Like, there's so much variance and nuance. My two favorite words, apparently. But no, there's so much, like, ifs there. It depends on you and your situation. I don't know whether you should move from Toronto to Houston. Genuinely, I have no idea. It's not like Houston is some big hub for trading. Look at the NASDAQ dump here, guys. Wow. Look at the NASDAQ fall. Is this NVIDIA related? Yep. NVIDIA cracked lows under 131 now. It's now at the 130s. NASDAQ's dumping down here. We'll see. But yeah, no, I'm not trying to, like, make fun of you. I just really just don't know. Like, that's something that I have no idea whether you should do that or not. It's going to depend on what your plan is, I guess. But again, for me, no idea. Do whatever you want to do. Nice haircut. My hair's kind of curly right now. How are the taxes in Houston? I mean, there's no state income tax, which is good, but if you own property here, you pay it back in property taxes. Yeah, you know how big oil runs the world in 1975. Something I was talking to my wife about too. Like, big oil runs the world, man. So like, there's so much bad press around EVs, and people just eat it up, and they just kind of like repeat stuff that they hear other people say. But there's so much like, there's so much bad press for EVs by big oil that like, you got to understand where it's coming from. Like, big oil runs the world. They obviously see EVs as a threat, and so they're going to paint it negatively any chance they can, and that's obvious. I'm not saying EVs are perfect. I think hybrids are really useful, and I think we'll always need lubricants and oil in the world, regardless of whether we use them for cars. But yeah, real estate's cheap. Economy's pretty good. No state income tax. Property taxes are high though. Oh, you can get like a mansion for $800K, depending on where it is, right? Well, mini mansion at least. All my problems are somebody else's fault. Yeah. It's surprising how many like desperate people. Like, dude, like, I don't know how many of my son's little friends whose parents, like, yeah. I've had a couple who have seen, they see me managing like social media, doing social media marketing, and they just kind of like latch on and try to be my best freaking friend, my best buddy. One of them wanted to get me to like promote NFTs around some like chemical company. Like, that's like the worst thing I could ever imagine an NFT be created for, is a chemical company. And I had to like politely kind of like stop responding to him. And then it makes it weird because it's my son's friends. Like, you learn, like, most adults, they want to network, right? But I don't care about networking with any of them. Like, it's not like I make friends just to use them for business, and that seems like a bad thing. And then a lot of the time it's a one-way street, so it's like, you can't really help me at all, but you want me to help you, and it's just kind of like, get out of here, bro. And then it makes it awkward with the friends, it's just kind of, yeah. Where are you at 7.5 in Canada? Oh, no, we're always going to need gas and oil. 100%. Petroleum, like, the stuff that's made from it is vast. When I say lubricants, I mean, like, oil. Right? Like, oil, All right, guys, we got 25 minutes left. Look at that rejection at the 200 exponential. If you're not watching the 200 exponential on a 1-minute chart, again, you're missing out, right? Like, look at this. Like, literal, that thing holds incredibly well on a 1-minute chart. On a 1-minute chart, right? The 1-minute chart, it's powerful. Northern Wisconsin, yeah. Palantir still falling down some. Let's see if it holds. Hey, thank you. Thank you, media guy. Thank you so much for becoming a member. I appreciate it. I appreciate the love, man. Thanks so much. I always try to tell people, you don't get anything super special for becoming a member, because like my goal is to create everything for free. But we got John, Carol. These are the coveted emojis you get. We got John, Carol, and Rosie, the German Shepherd. The 200 exponential is much more powerful. Like, I don't mind small moving averages, but the issue is this, right? Is that, like, there's a lot of placebo effects. in markets, right? So if you start using one of these small moving averages, the reason I use the 200 exponential is because it's long enough in time frame to actually be influential, right? But when you start using the 9 or the 12 or the 15 or the 20 or the 25, right? Those are such short-term moving averages that it's going to look like the stock is following those moving averages when the reality is the stock's just moving and the moving average is lagging behind it, right? Slightly. And so it kind of tricks a lot of people into thinking that there's some big edge with these really short-term moving averages. And personally, I don't think there is. But maybe I'm wrong, and maybe I just don't know how to use them correctly. That's possible too. I just don't like it. I like long-term averages that are actually influential because, you know, people generally at least have a couple long-term averages on their chart. And so the more long-term it is, the more milestone it is. And when it's a milestone level, people actually react to it and base trades around it in larger time frames and shorter term time frames. And so I just like the 200 exponential, and you can kind of see the confirmations in it here. Like here's the 200 EMA. We literally bounced directly off of it on the NASDAQ. We rejected directly off of it here as well. Yeah, we got good day, sir. We got a bunch of other ones. But I appreciate becoming a member, man. Thanks so much. Hey, we got 165 likes. Thanks so much, man. We got the CPI inflation report today. We had payrolls on Friday. What a time. Where's Tesla at, man? I didn't even look at Tesla today. Tesla hasn't really moved. Actually, Tesla is down a little bit. Tesla down at 380s. All right, chat. Yeah, PPI is tomorrow. CPI is Wednesday. Graphs? What do you mean? This is Top Step X here. 85 is low. I don't think we'll go there. 85 or what? Oh, crypto? I mean, I don't know, man. I think you got to look at it in terms of like bull and bear stages of anything. You know, like the problem is things go like this, right? They go up and then they go down a little bit and then they go up, right? This is mostly any strong like growth asset. Long term is going to look like this. Big swings up, pullbacks, big swings up, pullbacks, right? Like that's the long term chart of almost everything. NASDAQ, S&P, Bitcoin. Bitcoin's a little bit different though, gold. But right, this is what most long term charts look like. And so the reason I think we can correct sometimes is because we're in a period like this. Right, and eventually we're gonna have to go like this, even if we continue like that long term. And I think you have to look at Bitcoin with that lens, where we've gone up a huge amount, and now we're kind of pulling back a little bit, and that's okay. That's normal. We're really at a pretty big support level here, though, at 90K. But who freaking knows, man? I don't know. I think 200 is around 85. All right, guys. Palantir cracking lows at 64s right now. Nvidia's at the top. It's at 130s. Let's see if we can hold over 130s. I think 130s is going to be a big milestone level too. What's up, Yair? I meant chart. Yeah, it's all good, Justin. I like Tesla, but Tesla has earnings at the end of this month too, on the same day as the Fed meeting. So here's probably the biggest day this month. All right, the biggest day this month is going to be, I think it's the 29th, on Wednesday the 29th. On Wednesday the 29th in the afternoon, we have the Fed meeting, right? So the Federal Reserve rate decision. We've got Tesla, Meta, Microsoft, IBM, Lam Research, Tetra Capital, Axis Capital, Waste Management, Bridgewater Bank, Dolby Labs, and more, right? Earnings all same day. Again, Tesla, Meta, Microsoft, IBM, Fed rate decision. All same day, all within a 4-hour period of time, right? That's the biggest day this month for sure. We got a bunch of stuff, economic reports, earnings, and that's going to be a crazy volatile day. I'm not sure why they stacked it like this year, but again, on the 29th of this month, it is a freaking ridiculous day for markets. We're going to have so much different stuff happen. It's kind of scary, to be honest. It's kind of scary. Yeah, I just got back from Disney World. Disney World's fun, but I'm glad to be home, man. It's getting a little hot. All right. I didn't laugh anybody for being bearish. The only thing I made fun of people for was thinking that we're going to crash every single FOMC meeting, which, of course, we didn't. If anybody's been paying attention, for the last, 2.5 months, I haven't been buying up anything in investments. I think we could correct. I've been saying it over and over again. I think we could correct this year. I think market's up a little bit too much for me to want to buy stuff. And I think, again, I've been broken record about that for the last, I would say probably the last, 2.5 months. I would say, since November. Because I think we need to correct. We typically correct at least 10% once every year. But I think the market's up 100% in 2 years. The NASDAQ is. And so I think, you got to understand markets aren't going to go straight up. And eventually we're going to pull back some. I'm not sure. I don't use Trade-Evade, guys. So I don't know. Yeah, I'm a bull, long term. Long term, we're going to go up regardless, right? But short term, there's risks right now. I think short term, we just might correct if you buy up too high right now, and then you're going to get a bad average long term. But again, I don't freaking know. Yeah, I think Trade-Evade's having issues altogether. All right, guys, we got 15 minutes. And again, if you haven't already, check out TopStep. TopStep gives you a demo. They test your skill with a demo account first. You pass that test, they fund you. You fail, you only lose what you pay for it. In this case, base one's $49. So your literal risk is $49, chat. Not the end of the world if you lose. A great way to learn how to day trade, right? Most day traders lose. And so it's just a great way to learn. They've been around for over 12 years. Again, in the futures market, people misunderstand this. In the futures market, you can day trade the S&P, the NASDAQ, the Dow, the Russell, gold, some currencies. Patterns are very similar to blue chip stock patterns, but there's no PDT restrictions. TopStep has paid out over $180 million since 2020. They fund thousands of traders. They've been around for over 12 years. They have some of the best rules in the game in funding. And again, they're going to give you a 50K demo. Just taking the challenge build skill teaches you how to trade. If you were going to pay for a demo account with real-time data, it's going to be in this ballpark anyway, which is about $50 a month for the base one. You got to make 3K without losing 2K first. Beautiful way to learn how to day trade. And once you're funded, if you use TopStep X, the biggest edge in funding, zero commission. Chat, literally zero commission. That's a huge edge, right? A huge edge. Although, again, they're an affiliate of mine. This is my second plug of the day in a few hours, so, bear with me, chat. But understand all these rules. I'm not an investment professional. I have no freaking idea what I'm talking about. If you copy me, you'll probably lose. Most day traders lose, and I think that's probably the same here. Most day traders lose regardless of where they go. But frankly, it's a lot cheaper to lose here than it is to put up, 10, 20, 30 grand yourself and lose that. most of the time at least. But again, confirm all of the stuff with them. I can't guarantee anything. I'm not an investment professional. And yeah, most day traders lose. Understand CFTC 4.41. All right, guys. You guys ready to day trade? Do you think we go up or down into the opening bell, chat? Bear with me. Pun intended, I guess. You know. And again, I talked about this earlier. Another reason the market is down is because we had these inflation changes on Friday. Friday, we had the University of Michigan. A lot of people misunderstand this and they tend to think that it's like inflation expectations specifically for Michigan only. I got another black eye, dude, from jiu-jitsu, bro. Another black eye. This is like my 10th one this year. Train jiu-jitsu, guys. But no. These inflation expectations that came out on Friday, it's the University of Michigan doing the analysis here. It's not actual Michigan. It's the University of Michigan data. They came out with inflation expectations, both 1 year and 5 year, during the Consumer Sentiment Report on Friday, and they came out noticeably higher than expected as well as expectations, right? They showed up at 3.3% for both 1 year, which originally was expected at 2.8%, 0.5% higher than expected for inflation expectations over the next year. So that's the short-term inflation expectations this year, noticeably higher than expected. That made markets go down. And then the 5 year showed up at 3.3% for inflation expectations versus 3% expected, 0.3% higher. This is scaring a lot of people. I'll put these data up on screen. There's the data release right there. This is scaring a lot of people here because this is making people realize inflation might be a problem, especially with high payroll numbers that we got on Friday as well. So, yeah. Does that make you guys scared, the inflation expectations? $50K this week, man. That's a big loss, brother. Hope you're all right, dude. Trade smaller, dude. Why are you trading so large, bro? Unless you got millions, you should never be risking 50K in markets. You know, 50K is a lot, bro. Scale down your size, dude. A lot of people try to look cool in markets. They end up losing tons of money. Again, that's the biggest thing that experienced traders learn is they don't care how they look. Right? People can make fun of me. I'm a huge trading wimp, but, you know. Young people have a different risk tolerance, I think, as well, to be honest. Younger people than me. I'm old. I'm in Michigan. Inflation is almost in every... Well, yeah, but it's not Michigan inflation data. It's the University of Michigan analysis of it. So, like, they're looking at inflation around the country, not just in Michigan. It's a big misconception. Yeah. So, it's a big misconception. Let me put this down a little bit and maybe lower myself here. Any economic data? Not really. What age? What, how old am I? I'm in my 30s. I've been trading for years and years now, though. I'm really mostly economist. Top 3 worst day trader ever. Yeah, I don't know, David. If you're 20, who cares? Yeah, I mean, listen, I don't necessarily disagree. Somebody said, if you're 20, who cares if you lose everything? Right. I mean, I don't necessarily disagree, but I'll put it out like this, right? Like, you listen to people like Dave Ramsey, and if you listen to people like Dave Ramsey, he's going to tell you only invest. Like, don't ever risk too much, like, only invest, right? But I really think if you're young, it's the time to take risk, right? I'm not telling you should just throw everything away. What I'm saying is that, like, look, you could be like Dave Ramsey and make some money, and that's good. And like, if you invest, okay, here's an example, right? Like, let's just do conservative numbers here. Like, here, I'm gonna pull the calculator out real quick. So let's say you do conservative numbers. Let's say you got 100K, right? Which I'm not gonna say is unattainable. Like, it's a number that if you really wanted to, you could save up for over a few year period of time. Let's say you got 100K, right? Hey, buddy, I love you, bud. Have a good day, man. You all right? You okay? What's wrong, dude? Hey. All right, so sorry, we're back. Yeah, I mean, listen, when you're young, sorry, my son's going to school. Okay, so what I'm trying to say is, like, if you listen to Dave Ramsey, right, let's say you make 4% a year. Right, 4%. Look at the market flush down, by the way. Let's say you make 4% a year. Dave Ramsey's going to say, hey, invest, make 4% a year, and when you're 60 and 30 years, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21. And then when you're 50 something in 30 years, you're going to make 324 grand, guys, right? That's what he's going to say. The problem is that $324,000 in 30 years is not going to be that big sum of money that you think it is. Hold on, wait. Did I do this right? Hold on, I couldn't have done this right. Did I only do 4% compounding? 100K, 1.04. Let me do this again. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Okay, yeah, $324,000. That was correct. So yeah, he's gonna say, oh, in 30 years you'll have $324,000, right? But $324,000 compounding is really not that much, and in 30 years, that's gonna be the same buying power as 100K, basically, maybe a little bit less, to be honest. And so the point is like, you can either try to, if you want to live good now when you're young versus living good when you're over 50. Like, to be honest, who cares if you're over 50 living good, right? Like, you're already, like, you know, like, when you're 65, you're going to get Social Security anyway, if it's still around. And so you're not going to need money as much then anyway. And so the overarching point I'm trying to make is, like, if you want to live good when you're young, you're going to have to take risks. Now, I don't mean take dumb risks. I don't mean burn money. I don't mean invest in a bunch of meme coins. But if you want to start businesses, the time to do it is when you're young and resilient in risk taking. If you wait too long, like, living good when you're 65 is great and all, right? But it's not what most people dream of. And so that's the issue I have with Dave Ramsey, is that, like, living good's cool when you're old, but most people want to live good when they're young. And if you want to live good when you're young, you got to take risks, right? You just got to take smart, calculated risks. 1 out of 6 businesses fail, right? Is the number. 1 out of 6 businesses. But once one sticks, that could pay you for the rest of your life, right? And so you got to be resilient to the risks and understand most businesses fail, but when one sticks, you know, that's all you need. Anyways, I'm going to end my rant there. Yeah, I mean, really, we should be doing it with 10% returns, because if you invest in the S&P, the NASDAQ, they're going to pay you about 10% on average, including crash statistics, right? So you take the same stat here, you take 100K, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. All right, so yeah, you're going to make about 1.5 million from 10% compounding a year. But still, 1.5 million in 30 years is not going to be as much as you think it is. It's going to be about 300K, 200K in buying power today. So it's cool, but it's not like what you think it is. All right, guys, we got the opening bell in 2 minutes. 2 minutes. Sorry, I'm talking to my kids. I'm talking to my kids. They're going to school. All right. All right, guys, we got 5 seconds. 5 seconds. All right, there's the opening bell. Yeah, I'm gonna wait in 5 minutes until the opening bell. We're in a combine account, but we will switch to our actual account after the opening bell anyway. I almost got 700 here for the open, so not bad numbers here. I hope you guys are doing good today. Hopefully y'all are making some money here. Doing okay. Looking at we asked people, is this the start of a larger correction? 48% say yes, 52% say no, which is interesting. That's 50-50 split. Yeah. All right, chat. Still waiting. We're gonna let a couple minutes pass. Now we're consolidating under the 200 exponential. I do like the kind of head and shoulders pattern that we got on this chart. So I do like short, and I think it's a little bit late now though. Nvidia bouncing up some here since the opening bell. I'm gonna put Tesla up, maybe Apple. See what these do. Nvidia looks strong and it's down a lot. Maybe we get some buying pressure coming in the open, but who knows? Correction is defined as 10%, so we're actually not at either one of them yet. We're down 6% from highs over the past couple months, so really we're not in either one of them yet. But it depends on how loosely you define things as a correction, you know. So. Yeah, Nvidia's breaking highs, looking better. Starting to move up. Tesla's bouncing up too. right, so again, we're kind of stagnant here. I think one of the things we could get today leading into inflation and earnings this week is stagnation. We get flat action ahead of big economic reports, and we got a couple big ones this week too, so maybe we'll get choppiness. I don't know. I'm watching Nvidia closely, and Nvidia is kind of middle range here. I'm gonna short. This is a combine account, so this is not like full risk or anything. We're just kind of playing around here. Took half off there. So we get some downward pressure. There we go. Just made about 225 on that trade. 225. Not bad. What am I at here now for the profit? So we were up about 850 in this one on the day. I'm gonna short again here, but ooh, that's a big drop. I'll add to it, but I don't really like this at all. I'm gonna cut half of this, lock it in, lock it in. Now we got one contract left. There we go. I'm gonna cut the rest. So now we're up over a K here. Down wicks on both the up and down side. Look at Nvidia, how choppy it is though right now. Here's the breakdown. Depends on what Nvidia does here, though. I'm watching it. Let's see what else we got. All right, now we're popping up a little bit. I'm watching that video though. Tesla's breaking highs. Tesla up to 287, highs of the day. Palantir's up there too. Where's Apple at? Let me see. Where is it? Let me see. Apple. Apple's down significantly on the day too. See a lot of red. I see Nvidia start to creep down. I'm gonna short here. Oh, dude, I missed the click. I misclicked. I'll try it, but took half off already. I just don't like the risk of sitting on this one too long. All right, so we got 4 contracts here. I'm gonna start lowering my losses here, just cutting it. There we go. Okay, made it all back. We're gonna get out there. So we ended up making it all back now. We're up 1,200 on the day. The goal is to make 1,500 one day, 1,500 the next. So we got about 3 left here. We're starting using one contract, and then we'll scale down to micros if we need to. I just made another $60. I'm gonna switch to micros now here. I'm gonna short this pop. I missed it here. But the good thing about micros is that we can kind of scale in. There we go. All right, so we're out. So yeah, we need 150 bucks basically right now. We're riding the downward trend. Very weak looking. I think Nvidia is looking weak too, but it's only to an extent. I'm gonna have to draw some levels on this chart. I think I will now with micros. So we got this level, which is very clear. I think we got this level right around where we are now, to be honest. Right about there. What else we got? Let's see. We got some consolidation there we'll look at. Yeah, I think this is reasonable right here. A little bit of a gap there though. And then we got maybe one more that we can look at right around here. All right, and then we have this isolated one here. Okay, so that's what I'm seeing right now for levels. Looking weak. We've got micro contracts now. Still looks weak though. And if Nvidia is breaking down, I think that's what a lot of people are baking into right now. All right, we're gonna buy this. Kind of risky. 2 contracts here. Maybe add to it. All right, we'll take half off there. Well, $20, not bad. Look at that support hold though, we called it. That's why I need to document levels every time. We get a bounce up there, we'll short, but I don't like it anymore. I'm gonna start shorting here, and we're gonna establish a larger position. The reason I'm shorting is Tesla's pulling back now too. 3 contracts. We will add on a pop. There we go. All right, we took half off there, locked it in. A little bit more. We'll add back on a bounce. Might not have time to. All right, we took half off again. We need like 125 bucks now, so we're trying to trade small so we don't risk losing it. Trading big with variance. All right, we'll add to this now. Big rejection there. 4 contracts. Take 5 and 6, and then we'll leave it here. All right, we just made some money there on that one. Took a little bit more off there, there. All right, we need about 100 bucks left. I'm gonna get out now. We broke over that level. So yeah, we need about $100 left. We called that low support level at 700 though. I see Nvidia starting to rebound. I see Tesla starting to rebound back up too. So give me a second here, chat, and we will see if we get something good. Where's Bitcoin? Yeah, Bitcoin tapped 90, underneath 90. Yeah. All right, so now we're rejecting back down. Depends on what Nvidia does here, though, Chad. So Nvidia under the 200 exponential. Let's see what it does. I want to short, but Nvidia looks strong here. It's the only thing. Yeah. We're gonna short at the top of this range, see if we get a flush. There we go, we're out. Didn't make a lot from it, unfortunately. Should have stayed in it. I didn't mean to cover the whole position. I just got a little overzealous, unfortunately. Was right about the direction. I just accidentally covered the whole thing. I wanted to take one off and I just didn't. I think this looks very weak now. I'm gonna start shorting into this with larger size to get the last $100. There we go. There we go. 1 contract left. Yeah, we need $75 left. A little bit less than that actually, but I'll add to a winning position here. Take it off. Get out the rest there. All right, we need less than 50 bucks. Very good accuracy on this thing today. Nvidia's still looking weak, so I still like a short, but I might be wrong. Don't copy me. I'm not an investment professional. I'm gonna short this too. There we go. Three contracts. See if we can add some to it up here. There we go. $15 left is what we need. We need $15. Is that 15? We'll add to this, see if we get it on one little pop, but no, don't do it to me. I gotta cut it. Yeah, I gotta cut it. All right, we need 35 bucks. Actually, no, we're good. We can stop right here, actually, because it's within a range. So yeah, we're good. We can stop right here. All right, we're gonna switch to our actual funded account now. Yeah, so bear with me. We're gonna switch to our actual funded account now. All right, so good. We got halfway there on the actual, on the challenge account. Yeah. And again, we are on Top Steps funded account program. So we got ourselves halfway to getting funded on that other account. We already have 2 funded accounts. And so we got ourselves halfway there. If we get 1,500 tomorrow, that's a 50K funded account, 90% split. I get to keep my first 10K in profit. And if I was to lose that, I'm only out $50. So it's limited risk. Great way to learn how to day trade, get some middle ground of pressure. Trading's about learning how to trade under pressure. And a good little middle ground of pressure. If I pass it, I get 50K funded account, 90% split, my first 10K in profit. If I fail, I lose $50. You know, it's the best of both worlds. They kind of test your skill. If you're good enough, they fund you. If you fail, you know, it's a good test of skill. And if you were going to pay for a real-time data without it, it would be in the same ballpark as $50. Again, if you want to check it out, they're an affiliate, or I'm biased. I get paid by them, so I'm biased, of course. But if you want to check it out, here's the link. Good way to help support the channel. Understand I'm not an investment professional. If you copy me, you'll probably lose. Understand CFTC 4.41 hypothetical or simulated performance have limitations, guys. I'm not an investment professional. Look at this pop. Wow. Look at this pop, chat. Look at this move. Huge green candle here. Nvidia's reversing. Tesla's reversing. Palantir's reversing. Bitcoin's reversing. What a pop. Let me see if this is news related. All right, so the National Security Advisor, Sullivan, expects the president-elect to update rules on chips, right? So basically, I think this is an optimistic move because this basically means that the president-elect might reverse the chip news that came out overnight. Is that why we're bouncing? That's plausible, I think. No? So again, U.S. National Security Advisor Sullivan expects the current president-elect administration to update rules on chips. And so then overnight they had rules that they were going to be really strict on chips overseas. That made the market dump and tank and drop. It's one of the reasons Nvidia is down to 130s today. And then that news came out. Is that what it is? Everything's rebounding big here, though. Look at that. Apple at 230s. Rebounding some. Look at that support hold. So my support is pretty good. Still watching Nvidia here, though. Look at that rejection back down here, too. Yeah, maybe pawn. All right, on this account, we're on a 5-day green streak. I'm gonna buy this dip. It's kind of risky, but it's all right. See if we get a little pop, build up some cushion on the day. All right, got a little $20 cushion. See if we can keep building. Little base hits with micro contracts here. Take a couple contracts here if we need. All right, so we got 2 contracts here. See if Nvidia can get over this level. So we can get a bounce. There we go. All right. Another $35 there or so. So we're up about 50 right now on this funded account. So you can keep building. Watching Nvidia now right at this 200 exponential. We couldn't get choppiness today because of the inflation data reports and earnings that we have coming out later on this week. Gonna add a little bit more. All right, so we got a $50 cushion that we can swing with today. I'm watching Nvidia here. All right, another contract here. We will add to this if we're green or. All right, another $20, so almost $100 on the day now. We got that bounce on Nvidia. What's up, 4K? I think NASDAQ will fall up to around 25 and then start rise, maybe. Yeah, I see Super Micros dumped down to under 29s. It's a risky position here. The big question right now, right? The story of right now, short-term and price action for everything here is, will Nvidia break this high up here in the day, right? It's tested it a couple times. It's gotten strong. It made a lot of optimism for price action on the NASDAQ, and then it's rejected it here. And so that's why the NASDAQ's trying to head up. It's into those support or resistance levels that we've drawn, but it's struggling here. Tesla's struggling as well. And if it comes back down under the volume weighted average price, the question is, do we start trending downward and start to bear trend for the rest of the day, right? Like, that's the current story of the price action right now. And again, we don't have any economic reports today now, I think. Yeah, we don't really have it. We got CB employment trends in 10 minutes, but that's not really a story. It's like insignificant for the most part. Later on at 11, we got consumer inflation expectations, though. Let me ask AI. I don't think that's big, but let me make sure. All right, Nvidia bouncing at that VWAP. Yeah, we got inflation expectations coming out at 11, but it's not really big. All right, we're choppy right now. We're really choppy, guys. I would just be careful. Yeah, I mean, this is not anything major. It's relatively insignificant, to be honest. Apple pulling back. Nvidia did break that high of the day, so look at it. It tapped it just now, but let's see if it follows through here. Tesla just broke highs too at 388. All right, Nvidia's starting to pop back up there. It's at 132s now, 132s. Tesla up there. Apple's still testing lows of the day though, but remember, this is a big inflation data week here, chat. Big inflation data week. So there's the Nvidia strength. I told you guys that was the story, and it is the story still. So Nvidia broke highs just now. We're kind of slowed our trading down now that we're up. Again, Nvidia finally broke over this range. We were in this kind of like triangle wedge shaped pattern. Nvidia finally broke the top of it. Now Nvidia's here, and you can kind of see what the market has done since then. It is now up following suit here. So again, we're bouncing back. So far, we've kind of had choppiness though. We got some big stocks breaking down, some big stocks moving up. And so most of the day we're still moving kind of choppy. We're at the top of the range now though. Yeah. How you guys doing today? Red or green? Let me know. Again, I know we're kind of trading slow right now, but I trade where the edge is, or try to at least. And right now I just don't see much edge. You know, I just don't see much going on right now. Red, green, 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 down 0.18%. Bitcoin is, I don't know, and last time I looked at it, it was down. It's down still on the day, but it's bouncing back up. It's at about, like, actual spot Bitcoin's almost to 92K today, so it's back up a little bit. Markets are pumping back up too. Nvidia's rebounding some, which is not a shock, right? One of the most simple correlations for people that watch the market regularly. It's one of the most easy things to predict is if we have big red action in pre-market and over the previous day. If we have big red action in pre-market, so let me change the color here out of pink. Let me see, where is it at? Oh yeah, it does. If we have big red action after the opening bell, a lot of the time we get rebounds, which is kind of like we see today, right? We had big red action in pre-market. After the opening bell, we got rebounds back up, right? And vice versa. If we have big green action in pre-market, big news, good news, all that good stuff, the following day after the opening bell, a lot of the time we get this, right? We get some red action to correct. It's one of the most easy predictions, one of the most easy correlations that you see in markets, to be honest. But yeah, guys, I'm probably just gonna bow out for the day. I don't really see much. I'll stick around for CB employment trends, and then I'll shut it down. But again, if you want to check out Top Step, this is my 6th green day in a row on my Top Step funded account. 6 green days. 1, 2, 3, 4, 5. Wait, I think it's got a reset. This is my 6th green day in a row. Now, we have been green. Let me do this. Let's see, 1. Yeah, 6 green days in a row now on this thing. In the month of January, Yeah, 1, 2, 3, 4, 5, 6. Yeah, we've had 6 green days in a row. You love to see it. I'll show you guys this. This is my graph so far. And again, if you want to day trade with me, Top Step's the best way to learn how to trade, to be honest. Most day traders lose. That's my graph. Most day traders lose. And so if you try to put up your own money, thousands of dollars, trying to look cool, you're probably losing. This is my 6 green days in a row. And again, Top Step gives you a demo. They test your skill with it. You pass the test, they fund you. You fail, you only lose what you pay for it. The base one's only $49 a month on Top Step. If you pass it, you get a 50K funded account, 90% split. It's just a good way to learn how to day trade. And most day traders lose. I think that's the same here. I think most day traders are just going to lose regardless of where they go. It's a lot cheaper to lose here. They are an affiliate, so I'm biased because I get paid by them. But they've paid out over $180 million since 2020. They fund thousands of traders. They've been around for over 12 years. Here's the rules on the base one. You can also get more funding, like 150K in funding. The base one's $49 a month, though. You got to make 3K without losing 2K. Reasonable 3-to-2 ratio. 5 contracts is plenty. With 2 contracts, you could be down thousands on the NASDAQ in minutes. So 5 contracts is plenty. No PDT in futures is where most pro day traders go. And so it's just a great way to learn how to trade. And if you do sign up, again, 0 commission on Top Step X. One of the ways I can make $20, $25, $12, $19 is because there's 0 commission, right? Huge edge in funding. Great way to learn how to day trade. But as always, guys, this is my 3rd plug of the day in hours. Understand these rules. Understand CFTC 4.41. Hypothetical or simulated performance. Have limitations, guys. I'm not an investment professional. I'm not liable if you lose money. I have no freaking idea what I'm talking about. I do trade off stream. You're not going to see all my trades. Sometimes I lose off stream. Top 3 worst day trader of all time ever in the world, guys. Don't copy me. Maybe. I don't know. Yeah, I see that running. I appreciate the donation. Thanks so much, Gus. And with that said, guys, I'm going to bow out for the day. Y'all be good. Y'all trade safe. Tomorrow, PPI inflation data. Chat, PPI inflation data tomorrow, 8:30 Eastern Standard Time, right here. Subscribe, hit the notification bell. I appreciate the love. Thanks so much. Again, PPI inflation data tomorrow. Be ready. Tomorrow, inflation data. CPI inflation data on Wednesday. Retail sales, jobless claims on Thursdays. Bank earnings on Wednesday. A lot of stuff coming out this week. We will cover it all live right here. Hit the sub button. I love y'all. Y'all have a great day.